So I have a rule where I avoid the first 45 minutes, and for good reason. You don't want to be pulled in on any of these whiplashes that can happen in the first 45 minutes. But look at this last week. This last week was quite a week of trading. This was actually Tuesday. This was the first 45 minutes. These are all 5-minute candles. Just a big flush to start the morning. And then Thursday was this. I mean, Jekyll and Hyde, whiplash, crazy moves from Tuesday to Thursday. And and here's Friday. So on all three of these days, if your plan was to avoid the first 45 minutes, then you were maybe sitting on your hands for the rest of the day because there weren't a whole lot of great opportunities after this. If you bought calls way up here, you were risking quite a bit. You were risking that rug pull. If you bought puts all the way down here, that would have actually gotten you in a lot of trouble during the week. And so what do you do? And I've adjusted my plan a little bit, and here's what I do. I have a watch list of the Nasdaq stocks, the top 10 at Nasdaq stocks, and I just really recommend having a 5-minute RSI displayed in your watch list so that you can actually watch this as it goes. And this was, I can't remember if this exact picture was from Friday, but this is from one of those days where I just saw it was just melting up and it just was nonstop. I know on Friday morning that AVGO had an 80 RSI. The semiconductors were really hot. And when that happens, it just really just keeps on moving and moving. And so this is what I do. My plan now is just to have 1/4 of a position in on these plays, get out pretty fast, and set my stop. That would not have been a bad move on any one of these. So if you would have gotten in, I usually wait for the third candle. And if you got in right here and you sold and made a profit right there, you can actually put your stop right above here, or you could put your stop right above where your entry was. And same thing here, if you waited until that third candle, you got in right here and you sold into strength, and then you put your stop underneath this wick where your entry was. Same thing here, if you got in right here after this little consolidation and it came back and tested the 8 EMA, you could sell into strength, and then you put your stop here and you just raise your stop as you go. You protect your profits as you go. This was over 100% move in 45 minutes. And so let's take a look at opportunities while they're there. And so we'll just take a look at this day. Our rule is always to scale out those profits and to look for trend breaks. But on this particular day, on Friday, there really weren't any trend breaks. You can see right now it's healthy with the RSI. It's looking solid, but also PSAR is looking solid. So here is something that I make sure I do. This is 9:15, and I want to make sure at this point in time that I have my Fibonacci retracement set. So that's going there, and I can adjust this during the day. The retracement I will adjust as we go. But the extensions, I'm finding out that if I will just draw them based on the first 45 minutes, and here's what I do. I come back up, I double click right there, and I get my actual levels understood of how far it might pull back and then how far it might go in a day. And so this is going to be a very slow move for the rest of the day. The big push happened at the beginning of the day. It was also a low volume day. So the movements that we saw were not really strong. They were pretty slow going moves. So you can see this one right here is struggling with that fib, and we're going to see a PSAR switch. And when a PSAR switches, you can think about averaging in so that you can make sure that you sell at the right point. However, if you did, look at that right there. It came back and it hit that 38.2 fib here on the way that I draw it. And that would have been your time to get out, because watch what happens after this. This was, a 30 to 40% move just from here to here. And it retraced and it just climbed. It climbed hard after that. So what we're going to do in any given day is look for triangles. We've got a trend line here. We've got a double top here, but we don't have any triangles yet. We're just got a resistance line here. You can see it has rejected a move down multiple times, but I think right here, this wick is a pretty good sign of the possibilities that are about to come. Watch the wicks because that will let you know, are they buying the dips? And right there, this is decision time. And here's the great thing about triangles. So we've got a triangle that is forming for sure. Sometimes you can even just keep extending this line. It doesn't have to be a beautiful triangle. You can actually have these lines crossing because that might also be something that we watch for a trend as it moves up. Two wicks down here, bottom wick, saying that this fib is getting bought. The algorithms are buying this fib right here. Stop buy for puts down here and a stop buy for calls up here, that you don't have to predict the move, but you can make sure that you're in the move when it happens. So I actually have a stop buy for calls right here above this wedge. And at this point, let's see, yep, now we're in. All right, so we're in at this point. This is strong. It's going to sometimes resist a little bit, but you can see it's healthy. It's above the 8 EMA. It's consolidating a little bit. And there's our fib. We drew this fib at 45 minutes into market open, and it's already still respecting it. So you're selling some here. You are selling a lot of times, especially on a Friday afternoon, I'm selling half of my position right there, and that's a 20% gain that we saw on that Friday afternoon. Came back, tested the 20. That was a nasty one. Rejected that as well. It's honoring this trend line. It's having a hard time with that fib. But now you can just see it has come out of that triangle. Trust. Wow, look at that one. Trust the triangle. If something is going to break out of a triangle, try to stay with it as long as you can. Some of these candles, as they were going, they were pretty nasty. But if you could have gotten in a part of that move right there, you can see it's going to hit that fib. And then let's see how it responds. We have about 45 minutes left in our trading. And now this resistance is being served as support. And look at this right up here. If I am sitting here with 40 minutes left in the day, I'm selling the rest of my position right at that line. I'm trying to see if I can get as much as I can out of that. Let's see if it hits it. And boom, it hit it. So you better be out at this point. If you're holding for more of a move after that, now at a certain point it gets to be greedy. This was 150% move breakout from this actual triangle, and you were rewarded for your patience. This was about 4 hours of waiting. You could have set an alert, you could have set a stop buy, but that is well worth your wait as this wedge breaks out. And let's just see how the day finishes. Hit that fib, rejected, came down here. Let's see how this ends, just to get a feeling of the end of a day on a Friday. Dangerous times here. Dangerous to be holding on to calls, and yet look at that. That's just crazy to me. That's a big, huge move as those calls were expiring at the end of the day. So 2 moves over 100%.